You were made to live a purposeful life, and a purposeful life is a life full of faith. No one ever said life would be easy. Gotta take it one day at a time. Keep holding on to your dreams and keep striving for a better life. When life gets hard, we don't pray to make it easy.
Hello, sir. It's good to meet you. How are you?
I am always great. When I have feet
Okay.
off ground, it's a great day.
Excellent. I know you're a financial guru, and I would absolutely love to know more about you. Tell us more about you.
Well, I appreciate you calling me a guru, but I'm just doing my job.
Okay.
I've been in this business since 1983, and I've seen every crash since 1987 to the present. And it's taught me the most important things that Wall Street typically is not discussing with the everyday investor, the folks that I call the middle class millionaires. And even the higher net worth people, the folks that have the 25 million and above. And what I've learned are the three essential building blocks. Okay, and then I'll talk about allocation and give some insight as to what new investors should focus on.
Okay, great.
Number one, you have to understand yourself emotionally when it comes to money. The twin devils on Wall Street are greed and fear. And almost always when you give in to those heightened emotions, it does not end well, meaning you're going to lose money. Okay, let's give you an example of greed. Greed is the person who thought that Bitcoin was just baloney, but after listening to his or her friends brag about how much money they were making for 2 years, couldn't take it any longer, and had to jump in, of course, at the very top, and now is wondering how they lost 70% of their money so quickly. On the flip side, folks who literally sold at the bottom, because it is painful when the economy is down and the stock markets are losing money to watch your net worth go lower and lower and lower every day. And at some point, the fight or flight mentality, preservation kicks in. You're like, I got to get out. I got to save something. And that's almost always when the market starts to go back up. So you better know yourself emotionally. And I think the most important role that a financial advisor has to bring to the table is to make sure that his or her clients do not make emotional decisions, okay? And make them understand this is a long-term investment, okay? The proof of long-term comes down to this, Joyce. If I took you back to 1980 and gave you $10,000 and said, two conditions, the money's yours. Put it in the stock market and leave it there until last night. People are astounded when I tell them that $10,000 has grown to well over $500,000. Now you can say 43 years, but the compound rate of return is pretty significant. And if I could turn 10 into $500,000 every 42 years, sign me up. Okay. Second thing, you have to have real risk management. A lot of investors found out in 2022 they had no risk management. Now, don't get me wrong. Everyone lost money unless you were smart enough and you took a shot and you either went short the market, which means you were selling against it, or you went to cash. Both can be pretty stupid, my opinion. But if you actually had risk management, there is no way you should have lost more than 15% of your portfolio's value. Now, I say that because our losses, because of the tools we use, and I am telling you, Joyce, okay, the majority of the tools we use are available to every advisor in the business. Many don't use it because it's either not, sanctioned by their firms, or their firms have a completely different business model. Okay, these tools were so robust that our losses ranged anywhere from 8.2 to 9.7 on our moderate and balanced accounts. That's net of our fees. And our aggressive growth manager was down 14%. Now keep in mind, aggressive growth, that's high risk. The S&P 500, the 500 biggest companies in our country, was down almost 20%, and NASDAQ was down 32.5%. Most people were pretty heavy in technology. And, Joyce, okay, if you're in your mid 50s or you're in your early 60s and you're thinking that, retirement's 10, 12 years down the road, and all of a sudden you look at your year-end statement and you go, I lost a third of my money. That's terrifying.
That's bad.
It is completely unnecessary. Now, here's the most important element, and I can't stress this enough. You need to watch the change in economic policy coming out of government. And let me explain why. Forget the politics, because that's just a cat fight. And if you really need that type of dialogue, just go on Facebook and have a political argument with any one of your friends. Policy is when the government changes something. And I'll give you the best example. We had an administration change. One president left, another president came in. Could care less about either of those guys, okay? But what happened is, between one coming in and the other leaving, policy on energy in America did in fact change. Again, doesn't matter why, doesn't matter who, but it changed. And economic policy changes out of DC almost always change the supply and demand dynamic of whatever the policy's aimed at. So if energy now has less supply, the price is going to go up. Look, I was in California last week. I thought paying $3.31 in New York was still pretty expensive. They're paying $4.69 for regular. That's brutal, right? Okay, so policy. So when you see that happen and you realize prices on everything have to go up, the reason we pay so much for eggs is because it costs them more to get to the store. Growth cannot compete with higher costs. If your practice costs you more to run, your net income is going to go down. It's just a given. That's how you drive real risk management. Okay, so what does a new investor or even a more seasoned investor do? Okay, all right. First thing is, you have to know exactly what you're trying to achieve. That's just intuitive. Do you want to retire at 65? Do you want to call it a career at 50 and start that art gallery you've always dreamed of? So you got to know where you want to wind up. Then what you have to do is not only find the right solution sets, but I think it's really important to find a skilled advisor who's been through the cycle enough times so that you can be proactive instead of reactive. And you have to have an advisor that actually listens. Because, and you know this from your insurance practice, there is an asset side to people's financial lives. There is a liability side to their financial life. And you as an insurance professional, you're addressing a great deal of the liabilities or potential. And you and I could easily point to countless examples of people who didn't get the liability side right and blew up their asset side.
Yes.
Okay, so you need someone that's going to listen to you, understand what you need, and more important, who's experienced enough to tell you what you need that you didn't know you needed. So how do you build this portfolio? Well, the first step is you don't. The first step is you need to set up 2 automatic buckets.
Okay.
The first is automatic cash savings from every paycheck or commission check or however it is you are being paid. The reason I say that is if you don't have cash to meet the daily occurrences, you come home and your kid says, there's a school trip, I really want to go on it, it's $300, Dad, Mom, can I go? But at the same time, okay, your spouse comes home and says, I need new brakes, all 4 brakes. All right, there's $800. And then the boiler blows up and you didn't have the right home insurance. Well, you know what, you're spending a couple of $1,000s. Well, if you don't have that money, guess what? That's a ton of stress. So I show every client, and you can do it with your clientele, just go to your payroll department. Set up a savings account in the bank. No cards, no checks. You got to drive at least 15 minutes to get there. Okay? And every check, take 3%, 4%, 5%. You're not going to miss the money. Put the money away. 3 benefits. 1, no more stress. 2, you're actually increasing your net worth every paycheck. Number 3, you are now your own bank. When opportunity comes along, if I could turn the clock back to April 2020, we knew the contagion was here. The stock market dropped like a brick in 6 weeks, but then it turned around. If you had that excess cash, and you could say to, if you were the advisor, you could say, Scott, I know how much money you have in that savings. Now's the time to take 100,000 or 25,000 or, however much, and buy stocks. Okay. In building the portfolio, do the same concept, automatic. If your company has a 401k, max it out. Okay. If you don't have a 401k, find yourself, and you're a beginner, find yourself a couple of really good long-term mutual funds. They've been around for decades. They've proven they can get you through thick and thin, and start the investment, and every month feed it. And I tell this to the young people, I don't care if all you're doing is putting $100 a month in. It's money that you would have spent otherwise, but now it's growing. And if you do this systematically, you will do better than 90% of the population. Now, how do you actually construct it? Well, you have to know how to measure risk and reward. Because what you want to do is have real risk management. Now, if you have enough money to actually buy individual stocks, here's the easiest way to build that portfolio. Joyce, you live in Tennessee, right?
Yes, sir.
Right. I guarantee you, if we go through your kitchen, your bathroom, your garage, your electronics, your car, I could put together a gorgeous portfolio for you.
I agree.
Names because you know what? You have Procter & Gamble in your house. Chances are you have Kraft Foods in your house. Chances are you have Hershey's. You have ConAgra. You have, Steel. You have it all. And you lay that type of base and let it grow. And be aware when policy changes of how to change with it, which is why you should find an advisor skilled in these areas. Okay, you're going to do well. And by having that cash reserve, when everyone is freaking out, that's when the market's on sale. And let me just finish this one last point, and then I'll shut up.
Okay.
You don't need all the economic indicators to know when a market is near the top and when it's near the bottom, and I'll prove it to you.
Okay.
Your neighbor who always drove an Acura TLX, an Infiniti, nice cars, little higher end, suddenly pulls into the driveway with a Maserati or a Mercedes 550 loaded to the gills. They went from a $50,000 to $60,000 car to $150,000, $175,000. Warning: people tend to punch above their weights when things look great. When everyone is running for the exit, they can't get out of the stock market fast enough. Okay, this is when the market's offering discounts. You're throwing it away. Look, if Tesla was $1,000 a share, and 6 months from now it was $400, but the company was still selling cars and they had new products coming out, before the whole COVID situation, I was the suit and tie with the suspenders, the cufflinks, the whole 9 yards. I got more shirts in my closet than I could ever wear, but if one of my shirt makers sent me a note saying we're having a sale, credit card was out before I even saw what they were offering. When the stock market's on sale, when everyone is scared witless, time to go shopping. And I can tell you, if you do that, you can double your rate of return over long periods of time.
Wow. Thank you so much for your insight. So, Now, how can our viewers actually get in touch with you? What is the name of your company? What is your contact information? So anybody who is looking to start a portfolio or to already work on what they have or to have you look at their portfolio, what is a good contact for you?
All right. First off, if they're traditional, the phone number is 845 774 2745. Again, 845 774 2745.
Okay, great.
Our website is scottlask.com. Okay. Now, I'm an independent advisor, but the broker dealer that I custody with is Wedbush Securities. It's one of the biggest firms on the West Coast. We're a New York Stock Exchange and NASDAQ member. And, we bring a lot to the table that most retail investors are not going to see. And my email is Scott with 2 T's .lask, that's LASK, at wedbush.com. That's WEDBUSH.com. And I want to assure, your listeners that we're more interested in the relationship. That's how you bring value to someone, by understanding who they are, what they need, and showing them what they may need that they may not be aware of. Not selling. Okay. You're here to give solutions.
Well, thank you so much for your advice. I really appreciate you, and I'll definitely be in touch.
Thank you so much.
Okay.